Right, just a few more little bits of info on this trade. If I just go to the 240 for a minute and find the trade. Now, one of the, not specific to this trade actually, this is that's the wrong day, there we go, the 4th. Okay, so on the 240 chart, it's worthwhile checking. Now, I haven't fully back tested this. It was something I was working on the other night along with a load of other bits and bobs. I was looking at ATRs and percentages to do with 240 as well. It's the 4-hour chart. Is check to see where the price is in relation to the 50 moving average. So in this particular case, where we would enter at 850 and we're going back towards the moving average. Ideally, really, you want to be sort of about 100-ish or plus points away, thereabouts. It doesn't have to be exact, but somewhere. Most of these trades seem to be in that kind of region, away from the 50 moving average, and we're trading back towards it in the vast majority of occasions. So, of course, we're then going to have the 21 moving average in our way. So that's when we're placing a trade. So if we're placing a long trade, we should be down this side to the bottom side of the 50 moving average. If we're trading a short trade, we'd be up here going back down to the 50. Now, there are some setups where the price is actually up here. It's quite close to the 50 moving average. And in those instances, normally I would expecting them to be traded the other way. So effectively, if we're close to the 50 moving average here, you're generally finding that you should be trading it away. It should be a short trade. So if it's a long trade, I'm not saying that I know for a fact that that disqualifies it, but it's something that I'm looking at the moment, and it potentially is an issue. So that's something to consider. It back to the if I can find it, the hourly chart. Just a little point about how long, say for example here, now obviously this is the 4th of April trade, the last one that I was talking about, and this was a little bit unusual in that the stochastics crossed up before the price hit the pivot, whereas normally it's the other way round. Normally the price hits the pivot and then we're waiting for the price to go up over the stochastics before we can get a trade in. So some attention has to be paid to how much time is spent underneath this pivot, if this were the case on this trade. And I hope this makes sense if I'm explaining myself properly. How much time is spent beneath this pivot before we eventually get that stochastics cross. And more importantly, I think, if you've got several hours under this pivot and they're all closing below the pivot, that to me would be a bit of a red light. So that's something to consider as well. Just going to do another one more video, which will be the backtesting sheet. Just wanted to show a couple of things because it's relevant. That I think personally, I think this strategy, or well, it'll be actually be a different strategy, but along the same lines, could be used against different support and resistance levels. For example, we have a stochastics cross here, around here, and I mean, okay, we're not quite hitting the 50 moving average, but we're sort of in that range. And of course, we have SPR dots, which have just kicked in here as well to the downside, and we have a big move. Now that's at 9 o'clock in the morning. I'd have to go back and check. I'd suspect that maybe we might have a news announcement or something around about that time, because that's quite a big drop. But you never know. It's something to consider. Likewise, we just go further on here. Okay, we're off the pivot. It's very, very nearly qualifies actually as a stochastics trade, because we're here, and it's like what I was saying earlier on. We've hit the pivot. The stochastics is over, so we can't go in yet. By the time it actually confirms as being closed, which is about here, oops, we nearly get a second hit. If I just enlarge that, very nearly get a second hit there. We do, however, get SPR dots going to the downside, so maybe that's something that can be built in. But we also have the 200 moving average, which, now whether the 200 moving average is actually having any effect there whatsoever, or it's just the pivot, I don't know. But my point being that there are other support and resistance levels that might be used using this same method. So that's just something to bear in mind.